Hello Gappers, Scott here, and this is the Gap Wrap for Monday, February 22nd. So I will look at the futures gap guys today, and we'll try to do the ETFs tomorrow. I did trade today, and that's why I'm going to show you the futures and the setups that led to this very nice win. So we opened this morning in the UHC zone. If you're new to Master the Gap, you can learn more about the nomenclature in these different zones. Or right here underneath resources under the gap zone map, right there. Okay, but we opened between Friday's highs and Friday's close in the UHC zone. We were just barely inside of yesterday's highs. We actually opened 11.1050, so it's 50 cents, half a point below Friday's high in the ESE minis. Historical win rate based upon current market conditions, 85%. We don't see many that high. Profit factor almost 1.4. It means historically it's made almost 40% more in profits than losses. And let's see, looking based upon current patterns, clearly no closing pattern risk or major ones were in play because we showed 80%, almost an 80% win rate and profit factor 1.6. And then even seasonality was good for fading and up gap today. 73% win rate, though profit factor was a little bit more break even. So just about as good as you're going to see on any given day. Very good numbers. Looking just above it in the UH zone, opening above yesterday's highs, win rates lower as you'd expect, but profit factor is still okay. So in fact, two of these three were strong enough for me to trade. Seasonality was not. It was not. Did not meet my minimum 60% threshold. So my plan was, in fact, I'll get to that in a moment. Just continuing so you can see the consistency. Profit factor for some reason looked like an anomaly there. YM was not as good based on market conditions, but good win rate. Patterns very good. Seasonality okay, even though the profit factor was a little bit weak. So that was a little weaker. Looking at the NASDAQ futures, wow, very good numbers there. Best numbers of the group, 75 to 85% win rate, even very good above the highs of Friday. Looking at the Russell, even the Russell had good numbers, and that one has been, as you may have noticed, probably has the fewest high probability trades or high profit expectancy trades in our gap guides because the stop size. This 30% is a little bit problematic. The Russell tends to be a little bit more volatile and you need to use a bigger stop. Taken in total, looking at these and the ETFs for both the UHC and the UH zone, these numbers were pretty darn good today. In fact, they were very good today in my opinion. And it surprised me because I'd actually gone into today after this weekend's gap wrap. When I did Friday's gap wrap, I'd sort of thinking odds were that I would not be trading today because it was post options expiration day. And as the research I showed this weekend tends to be riskier for fading gaps, more so for down gaps than up gaps, but still it's not a great day for fading gaps in general. And I thought the numbers would probably be a little bit weaker than they actually ended up being, and that would be enough for me to just sit out today's trade. But instead, the gap guides were what I would call compelling. So I dug into my research a little bit further and really couldn't find anything wrong. NASDAQ looked like it was going to have a pivot straddle where it'd have to traverse the daily pivot in order to fill the gap, but that was the only index that I saw that had that situation. And I dug into this Monday following options expiration, and I specifically looked at zones. So this weekend I showed you up gaps, but breaking down the zones, looking at the UH and the UHC zone, look at the difference. Historically, UH zone was a dog, only 5 of 18 winners. Small sample size, but still a dog. But 7 of 9 in the UHC zone, where we have today, were winners. And the PF was positive, something like 1.2, and 6 of those 7 hit the extended target, and the profit factor was something like 1.6 or 1.8. So though the sample size was very small, it was consistent with what the guides were showing for this zone. This is one of the best zones, period. And it appears Monday following options expiration day, it continues to do well. So I had no reason not to trade it based upon this data. Okay. Let's see. In terms of supporting factors, really nothing that I haven't mentioned other than multiple successive higher lows is normally a positive. The one caveat I gave you is that as you get the string of higher lows and higher highs becomes longer, meaning more consecutive days, like it was 6 in the ES prior to today, that edge tends to diminish more back to a normal probability. So I weighed it all out. I had to trade it. Not only did I have to trade it, I wanted to trade it, and I'm telling you, and I want to be clear, I never share information in my gap wrap videos that I do not believe to be honest and sincere. Okay, so if I led some of you that are not members to think that there was no way I'd trade Monday, I don't believe I said that. If I did, let me know, but I'm pretty sure I didn't say that. I just had a negative bias looking at that one piece of research. And the key to being a good trader, at least a good probability-based trader, which is what I consider myself, is to not rely upon a single pattern or a single set of data. I like to look at a setup from multiple angles and look at those probabilities. When they're all consistent, you got to trade it. That's what we had today, and that is what I did. So it was a nice trade. Let me show it to you. See, I didn't do anything normal or abnormal. Standard size stop, targeting gap fill area for most of the position, holding a small part for extended target, and possibly more depending upon market conditions. So let me show you the 5-minute action. And let's see. You can see the NASDAQ was a dog. Had the best numbers and was a total dog. Look at that. But all the gaps started filling pretty much immediately from the open, and ETFs did as well. Let me expand the ES and show you exactly how I managed the trade. You may pick up a nugget or two. So first thing you stand out, these bands. This is the price guide confluence that we post each day for members. Lots of heavy confluence underneath. I was concerned about that. That's why I decided to scale out the vast majority of my trade precisely at this gold line. I went a half a point in front of gap fill. Gap fill settlement was 106.25. This top line was 106.75. Last trade was the blue line. Slightly different than settlement, but essentially gap fill. And got out right there on the third 5-minute bar. It's about 10-12 minutes into the open. I was out in the majority of my position. I held for the extended target, which I failed to point out, but on the price guides, if you go back in the video, you'll see it was about 2 points, and that means you take 2 points from the closing price, and that's your target. So depending upon if you use settlement or last trade, it was this 11.4 area. I used 11.425 and pretty much nailed the bottom of the day. Now I held on to a tiny piece of my trade, being greedy as I explained in the trading room to members, and I was looking for this next level of confluence down here, and did not happen. But when it didn't break down here, I tightened my stop to just above these wicks here, the higher bounce. I was stopped out at right around here, right around 10:30. So I only made 2.5, 2.25 points, something like that, on that tiny part. But for the bulk of the trade, got out just in front of gap fill, held another nice chunk for 11.425. So this was, let's see, this was I was filled at 11.1050, and I got out at 11.0675. 3.75 points for the majority of my trade. Another chunk, 11.425, that was plus 6.25 points, or about a little over $300 per contract, and then only got a little over $100 per contract on this small minority part. So that's how I did it. Not a perfect trade by any means, but pretty darn close other than that last little part right there. And I did no other day trades. I called it a day. And that is the gap wrap for Monday, February 22nd.